Stock market investors, welcome back to the channel. My name is Jason. There's blood in the streets again today. All the major indexes are down, but when it's bloody in the streets, that's when we want to take it as an opportunity to buy stocks at a considerable discount. Today, I'm going to give you guys my number one stock that I'm buying right now during this most recent sell-off. This stock is one of the best companies in the entire world. I'm going to show you why it's a great buy. Make sure you stick around. Before we get started, guys, make sure you hit that like button and subscribe to the channel. It really does help us get into the algorithm. And that's right, we're talking about Google, or Alphabet, the parent company of Google. It's a monster conglomerate that owns not only the Google search engine, YouTube, and a plethora of other businesses. I love this stock. And over the last, year to date, we're down 15%. Peak to trough over the last year, down 22%. The biggest company, one of the biggest companies in the entire world, being down 20%, and it pays a 0.5% dividend, which is always a plus. Sounds like a buy to me. I'm going to tell you guys why. First, in breaking news, Alphabet to buy Wiz for $32 billion in its biggest deal ever to boost cloud security. It's a hefty price, up from the 2024 bid of $23 billion, but they need this to compete with companies like Microsoft and Amazon, right? So on the news today, the stock was down between 3 and 4%, but Google to acquire cloud security startup Wiz, $32 billion after the deal fell apart last year. Google on Tuesday signed a definitive agreement to acquire New York-based cloud security startup Wiz for $32 billion buckaroonies, man. Google schmoogle, wow. Absolutely incredibly impressive. Wiz was talking about going IPO, but man, Google, Alphabet just threw a ton of money at them, and you were like, we're taking the money and running. You don't know, in these uncertain times, take this certain thing, and that's what Wiz did in this $23 billion acquisition, right? It's all cash deal. Largest deal ever, topping the $12.5 billion that they used to buy Motorola back in 2012. Probably not the best deal ever, but nonetheless, this is going to make this company stronger, right? And when companies get stronger, it's going to make us some cash, guys. They have around $100 billion of cash on the balance sheet, which I'll show you later. So this is a drop in the bucket, right? Drop in the bucket. Yeah, they walked away from the $23 billion deal last year. Large acquisitions were really difficult under Joe Biden's administration, right? He didn't want these big companies getting any bigger. I mean, I guess I understand the argument, but when a company like Google wants to secure their business more by acquiring a cybersecurity network, I don't see any issue with that, in my opinion, right? Alphabet CEO Sundar Pichai was among the group of high-profile tech execs who attended President Donald Trump's inauguration in January, and the company donated $1 million to the inauguration fund. So Google's playing the game, guys. You got to play the game if you want to get to that next level. Wiz was founded in 2020 and has grown rapidly under CEO Rappaport. I mean, it's a great company. They're doing really, really good things. Now let's talk a little bit more about the actual company of Google, Alphabet, and show you guys why I think it's such an incredible buy at this price point. All right, so the enterprise value, $1.95 trillion. The market cap, $2 trillion. So when the enterprise value and market cap are about the same thing, I like that. I definitely like that. Okay, and if you look over the last, year and a half per se, trailing PE is at 20. It's the cheapest it's been since 2023, late 2023, guys. The forward PE is under 19. The S&P 500, which is a lot of established companies that don't grow a lot at all whatsoever, trades in between 20 and 30, right? Most of these companies. This is trading cheaper than the S&P 500 right now, right? If we take a look at VOO and we take a look a little closer at where this company is trading, this is like a basket of all the greatest stocks in the S&P 500, right? It's trading at a 25 PE ratio, trailing 12 months, right? So Google is considerably cheaper than the broader market in the S&P 500, right? So whenever you can get a company like Facebook, Amazon, Google trading cheaper than the index VOO is trading at, man, that's a time to jump in. The PEG ratio is about 1. Also, one of the lowest numbers we've seen in quite some time. Back in the end of 2023, it was at 1.33. It's at 1.20 today. Price to sales under 6. Also a better number than it's been in quite some time. Price to book is in that 6 range as well. It's a little bit high price to book. But if we take a look at the company, right, and we dive a little bit deeper, right? Revenue, $350 billion over the last trailing 12 months. That's what that little TTM stands for, guys. Revenue per share, 28.41. Quarterly revenue growth year over year, 12%. For a monster company that has a $2 trillion market cap to be growing in double digits is freaking insane, man. It really, really, really is insane. Gross profit, $203 billion over the last trailing 12 months. The EBITDA is at $129 billion. Here's the balance sheet, guys, right here. Total cash, $95 billion. Total debt, only $28 billion. They could wipe away that debt just like that if they wanted to, right? But you don't do that when you get really, really cheap debt, right? So you make that money work for you, and that's what Google's doing by acquiring this cybersecurity company in Wiz, man. Operating cash flow, trailing 12 months, $125.3 billion. Levered free cash flow in the last year, almost $60 billion. Just from their free cash flow, they could just buy Wiz outright. Just over the years last free cash flow, man. It's absolutely insane. I'm just scanning some of these other numbers real quick to see anything else that I want to point out to you guys. The short interest is basically nothing. You have to be crazy to be shorting this company. 52-week high, $208. 52-week low, $147, right? We are trading at $160. So we're approaching 52-week lows. Always a great time to buy a company like Google. It's incredible, man. These prices are not going to last long, in my opinion. 50-day moving average is at 186, where we're already below that. We're below the 200-day moving average. They're also buys for me, man. So if you look at Google, is it a falling knife? I don't give a shit, because I'm going to slowly acquire these shares over time. I'm not saying take 50 grand and go dump it into Google stock. I just ripped off 50 shares over the last couple days, and I'm going to start building out that position over time to get to 100 shares and maybe get out to around 500 to 1,000 shares. That's my long-term goal of Google, and just let it ride, because the risk to reward is great in my opinion, especially at these prices. 52-week low at $47. We're approaching those numbers. I love it. Held by institutions, 61%. That's a solid number. Now let's take a look at the income statement over the last year. So as you can see, quarterly, $86 billion in revenue back in December of 2023. Came down to $80 billion, and then we've been going up each and every single quarter, right? $80 billion to $84 billion to $88 billion to $96 billion in revenue in this most recent quarter, right? The bottom line continues to increase. $20 billion, $23 billion, $23 billion, $26 billion, $26 billion. So even on the bottom line, $26 billion, these numbers are crazy, man. This is a money-making machine, guys, and that's companies I want to be invested in. Revenue up 11%. Operating expenses are down 7.79%. I love that. Clap it up for Google, guys. Clap it up for Google. Net income up 28%. Net profit margins up 14%. Earnings per share up 31%. Woo! Baby! Oh my gosh. Google. EBITDA up 36%. It's just incredible, man. Balance sheet wise, assets just continue to go up quarter after quarter after quarter after quarter after quarter. Liabilities staying about the same going down. They went up in this last quarter, but they're pretty much the same, with the total assets going up. The changes in net total liabilities, we went up 20 billion in total assets and up about 10 billion in liabilities. I'm cool with that. Cash and short-term investments down 13%. They're getting cash to make deals like the deal they just made. Total assets up 12%. Total liabilities only up 5%. It's only as long as assets are growing 2x the rate of liabilities, I'm perfectly comfortable with that. Cash flow, we see ebbs and flows quarterly, but annually the cash flow pretty solid. If we take a look at the cash flow statement that we just looked at, levered free cash flow, trailing 12 months, $56 billion. I don't have any issues with anything going on here at all whatsoever. But for me, the income statement, if you look at it, you zoom out, the annual revenue continues to increase. The bottom line has went up every year for the last 3 years, from 282 to 59 billion to 73 billion to 100 billion dollars. This company is growing on the top line and the bottom line, guys, and to pay under what we're paying for the S&P 500. So when you buy VOO, you're paying that PE ratio of around 24 to 25. For Google, you're paying in the 20s, man. It's absolutely bonkers, right? So the trailing PE is at 20. The trailing PE for the S&P 500 is over 24, right? So we're getting a considerable discount on Google shares when you compare it to the broader market, right? And that's a time I want to buy great companies at a discount. I love Google stock. Make sure you hit that like button and subscribe to the channel. And let me know in the comments, do you like Google? And let me know what stocks you're buying during this recent sell-off. I would love to know. Thanks for tuning in again, guys. Peace.